Hi, am I live? All right. Lion, could you send a plus to show that you hear me? Hi. Can you guys hear me? Okay, perfect. Okay, let's start then. So today is just a short introduction, I think. So we'll just go through the very basics. So we'll not go into deep topics today. So, all right. Can I do it like this? Oh, no, I cannot. Okay, so today we're gonna talk about trading terminals and the different terms, like what is an instrument, what is bid and ask, and so what is a trading terminal? I don't know the exact definition, right? It's just a place where you can see prices, charts, some things blinking green and red, and possibly also trade. In some terminals you can trade, in some you cannot. For example, here is a trading view terminal, and I cannot trade here. Possibly if I open some paid account, whatever, I can, but it's like a read-only thing. I can only see the charts, different instruments, probably. I don't know, I'm not very familiar. Yeah. And another example is we have MetaTrader 4 terminal, right? Some of you already know this one. So this one should be more familiar, right? So we also here have some charts, some numbers running. We also have a MetaTrader 5 terminal. Okay, it's also running. Basically the same thing as MetaTrader 4. Or, for example, I have here Trader Workstation from Interactive Brokers, another terminal, right? So in many ways they are similar. Some are simpler, some are more sophisticated, have more features. For example, here I don't know what's happening. So we'll just go forward with the MetaTrader 4 terminal. Oh no, actually with the MetaTrader 5. And because everything we're going to discuss here applies to any terminal, any financial system, whatever. So this one is MetaTrader 5. And yeah, closing the trading view. So we have our terminal running. I have some demo account connected, also called a paper trading account. So you're not trading real money, you're trading paper money, or I don't know why they call it like this. So what do we see here? First, we can see a list of blinking numbers and names, some text here. These are called trading instruments, or okay, let me write this down. Instruments. It is the same, like the name of the instrument is called a symbol, but we will use it interchangeably, right? So interchangeably, yeah. So it's the same thing for us. So instrument is the same thing as symbol. Also, we can notice probably that these instruments here are about some currencies, some money like euro, dollar, British pound, and etc. Right? So these instruments are also called currency pairs. So we can see each instrument is a pair of currencies. So Forex, in Forex, is the same thing as currency pair. But what about, by the way, Forex is foreign exchange. It's just when we trade currencies for other currencies. So these are Forex currency pairs. And what other trading instruments we have? Metals, gold is metal, silver, platinum, whatever. And we also have available some indices, which are not currency pair and not currency pairs. For example, I see some index here, but we should know that actually all trading instruments are some kind of currency pairs. They are asset pairs. So they always represent a pair of things that you can buy or sell. For example, in this case, was it a NASDAQ index? Yeah, it was a NASDAQ index. So this instrument is a pair of NASDAQ index and United States dollar. And just the United States dollar is implied here, it's not shown. But actually it is also a currency pair. So when you buy or sell NASDAQ index, you actually exchange it for United States dollar. Okay. Oh, by the way, if you have any questions, please write them in the chat. I will try to read them sometimes. Oh yeah, the Subway servers. It's about. I had a free real estate on the screen because my laptop screen does not match the video format. So I think this thing would help the younger folks to concentrate better. All right. Okay, no more questions for now. So, what are instruments for? Instrument for what, right? It's an instrument for trading. Instruments or a symbol is something that you can trade. A trade means buy or sell. So any of these instruments we can buy or sell in the trading terminal. Here comes a very important point, I think. I'm not sure it's outlined enough, actually. But buying and selling, it's very important. It will be mentioned, might not be mentioned, right? But it comes up everywhere in finance. Buying and selling are two sides of a single coin, right? So they are always symmetrical to each other. So if we're buying something, we're buying it from somebody who's selling it to us. So if we buy, somebody's selling, right? So if something happens when buying happens, then something should happen in reverse when selling happens. So this is very important. It's a bit abstract right now, might not be relevant to anything we discuss, but you will see this everywhere. It's very important to know. Buying is not different from selling in some specific way. It's just one direction. And for example, if we buy like euro dollar, right? We buy euro for dollar. It is exactly the same as selling dollar for euro. So it's just like buying is not better or worse than selling in any way. It's exactly the opposite thing. So they are mirrors of each other. And what's also important about symbols? Symbols here, or instruments, they are not real in any way, right? They are just some text on the screen. They're just names and some numbers that correspond to them. So they can be named anything, right? We could have an instrument here named Timur. And what does it mean if we have an instrument named Timur here? I don't know, right? It depends completely on who's providing this instrument and what they mean will happen when we trade that instrument. So, for example, here the names could be anything, but we, some of us, work with MetaTrader 4 and 5. In MetaTrader, Forex instruments have specific rule for naming. Other instruments don't have any restrictions on how the names could go. The only rule in MetaTrader is that it has to be so that first three and the next three letters are currencies. So apart from that, for non-Forex symbols, any instruments could be anything, right? And we cannot know from its name what's going to happen. We need to know some more details about the setup, what's going to happen when we trade. For example, here, I'm not sure I can trade. Can I? Probably not. How do I trade? Oh, I cannot do it. So, what else is here for the instruments? Like, it's just a list of things that we can buy and sell. Here we have two columns of numbers called bid and ask. What is bid and ask? Oh, okay, we'll not wait for any answers. Ask is something that you could probably buy this instrument at this price. And bid is that you could probably sell an instrument at this price, at this moment. So they show you approximately like what you can expect if you send a buy request, how much it would cost for you to buy and sell. The question is, do I trade? I do. Is it better than sports betting? It is better because I know something about trading. I know nothing about sports betting, but it's very similar. I mean, all the concepts might be called differently, but everything you know about trading applies to sports betting as well. Just different names. You have to know the names. So, an important question, like we're gonna go deeper than just saying that this is buy price, this is sell price, right? Can the price of this bid or ask, can they be negative? Or can they be zero, right? We have the numbers, all of them are positive. Can they be negative? It's a question that we can play around with, right? And the answer is yes, they can be negative. So what does it mean that something has a negative price? So for example, you buy something at a negative price. It means that you get something and you also get, for example, money in addition for buying that. Why could it happen? Or for example, if you're selling something for zero price, it means that you're giving something for free. Could it happen? It could happen. So both zero and negative prices could be in bid and ask for any instrument. Technically, this happens very rarely. Why would anybody sell something at a negative price or buy? Of course, you would buy something at a negative price. That's not a question, right? But why would you sell at a negative price? Well, it happens sometimes. For example, if you want to sell something so much that you're willing to pay to the one who takes over the asset. For example, if keeping the asset would get you in jail, would you sell it for minus $100? Sure. Please take this $100 with it and free me from this asset. However, if we're looking at the technical side of it, for example, in MetaTrader 5 and 4, negative prices are not possible everywhere. Like technically they are not allowed. And zero prices also not allowed. Why? Because negative prices are rare, but programmers' mistakes are much more often. So if you allow negative prices in the platform, you would more often get them because of some mistake rather than somebody selling at a negative price. That's why in these two platforms, MetaTrader 4 and 5, they are not working properly. I think in many other platforms is the same thing, right? Because nobody wants to deal with the negative prices because it's much more complicated, much more difficult to protect from some mistake. Okay, so any questions so far, please? On the bid and ask what they do. Oh, by the way, yeah, let's write down some terms so that we don't forget them. So we've covered bid, ask. Also, in some places, ask is called offer. So ask price is the same as offer price. Next, we should cover what is spread. Spread is ask minus bid. So it's the difference between at what price you would probably buy and at what price you would probably sell at this moment. Can we show it here? I think we can. Spread. Okay, so in this case, for euro dollar, the spread is very low, like 1 point most of the time. So it means that the difference between them is, I don't know if you can see, is one tick. Oh no, one point, which is the smallest change, right? 99.2001 here. Why do we need to know the spread? It has many meanings. Like in next lessons, we will take a look probably at some other meanings. But overall, it's the measure how much money you would lose from trading this instrument by default. Like if you just trade this instrument. So for example, if I buy and immediately sell, I will lose. Like if I buy at an ask price which is higher than the bid price and immediately sell at the bid price, I will lose the difference of the price. So spread shows that. Also other things, it's a proxy for many other things. But so far, just let's have at least one definition, what it shows. A question about what is the price of an instrument, right? So, for example, do we have anything other than currency? So it's simpler to talk. For example, this is gold. Why is it gold? Because AU is the two-letter code for gold in periodic table. You remember chemistry? So AU is gold. What is silver? Silver is AG. I'm not sure if everybody knows periodic table. Gold, where is it? Here it is. AU is gold, silver is AG, platinum is PT, for example. What does it mean? It means that the platinum will have PT there. Here it is. Why is there X in the beginning? I think because AU is just 2 letters, but you need 3. So you put X and then AU. It's just a filler in this case of a free space. Oh yeah, okay, yeah, I answered the question, hopefully. So it does not mean anything specific. It's just a way to consume one spare space. So we were talking about the price. What is, why not error? I think, I don't know. I don't know. I think maybe there is an instrument called Aurum or something like this, but it could be called anything. It just depends whether you want to trade it or not. So usually people do it like this and everybody understands. So what is the price of gold, for example, here? What is the price of gold abstractly? What does it mean? Turns out there is no price of gold, like any specific definition. What is the price of gold, right? It depends on many things and depends on what you want, right? If you want to buy gold, probably this is the price that you should look at, right? If you want to sell gold, probably this one, right? What if you don't know if you want to buy or sell, right? Technically, there is also people use so-called mid price. So its spread is ask minus bid. Mid price is the average between bid and ask. So bid plus ask divided by 2. So it's the middle between bid and ask. Actually, we can see the prices here. The bid and ask prices drawn on this tick chart, so-called. So this is the ask. Oh, it's going up, down. And bid is mid is the middle between bid and ask. So you could say that in average, the price is something between bid and ask if you don't want to buy or sell specifically. I see a question. One moment. How much money I would lose? Does it mean that spread can go negative? Yes, of course. If ask is less than bid, then the spread could go negative. What are the situations when it can go negative? For example, you buy from one place and you sell in some other place. So your spread will be different, could be negative. So if you can buy in one place cheaper than you can sell at the other place, the spread will go negative for you, right? Or if somebody is willing to sell at a price cheaper than somebody else is willing to buy. Of course, technically, the person who wants to buy will immediately try to buy from that person, but that may not happen for some reason, for many reasons, like for whatever reasons. So technically, it could go negative. However, in MetaTrader 5 and MetaTrader 4, I think it cannot. I think it could go only as low as 0, and I'm not sure it can go negative technically, right? So on many platforms, I also think that it could not go technically negative. But in reality, anything can happen. So it could be a negative spread. Negative spread is profit. Yeah, it means if you have a negative spread and you buy and sell immediately, you immediately make profit. So you lose the negative amount. Okay, so we mentioned mid price. Also, an important indication that is sometimes used is called the last price. It's also another way to express how much is the price of something. It is the price that somebody made a trade, the last trade so far. So if somebody buys at some price, it means somebody also sold at the same price. So both parties agreed on some single price at which one bought and another one sold. And this becomes the last price until a next trade happens. So last price is another way to express that something is worth something. For example, these things also relate to anything, right? For example, you deal with real estate, right? You shop for apartments. And if you want to buy an apartment, you see the asks or offers from the guys who sell the apartment, right? And you can also know, if you're like a real estate agent, you probably know the last price for similar apartment that happened recently. For example, somebody already bought a one-room apartment in the same building on a similar floor like yesterday, and you know the last price is like this. So you know that at least at that time, that was the real price of that apartment that two people agreed. And you can say that a similar apartment could be worth the same amount for a while. Do we have the last price and mid price here in our terminal? We do have a last price. We don't have the mid price, I think. We don't. And we also don't have the last price. As you can see, it's empty here. Why? Why? Because these are just numbers. They can be here or they can not be here. It's all fine. Yeah. Nobody dies if there's no last price, right? So they just decided to not supply it. In this case, maybe on the other brokerage, they will show the last price. Okay, the questions. I suppose on TT platform can. I don't know what's TT platform. In the table on the left, we can see the last price for USD RUB. Yeah, right? No, it's not last price. This is still bid and ask. They just happened quite some time ago, right? So they haven't been updated for a while. We can take a look when they were last updated. So I guess 1 hour ago it was updated, right? And by the way, funny thing, look at this price, right? It's here. It's dollar for ruble, and it's completely different from what you would see in any other place, right? So let me see in Google, 1 USD in ruble. It's different, right? 91 rubles here and 88 rubles here. How can it be that different, right? Whatever, it's just numbers. It's not It's just a price for something which is like 6 letters. It could be any name here, like Timur could be here. What does it mean, Timur? And the price is 91. I don't know. So don't take it too seriously here. It's just a price for this instrument, which is called with the names of currencies, but it does not matter. Any other questions for now for the prices? Mom, I'm streaming. I think I need the Wi-Fi signal straight. Can you open that door, please? Thank you. The question, should last price include applied markups? It is the price at which somebody bought and another person sold at this exact price. So it should be the price that was bought and sold at the same time. Like, I understand what you mean here, but you can include the markup, you can not include the markup. Depends on what you want to show in the price. Technically, it should be the price that both parties received. So in this case, if we're talking about the MetaTrader, right, and the things we're dealing with, in this case, it should include the markup, right? Because you bought from the broker, and the broker shows you the price with the markup. So in this case, the price with the markup is the last price. Okay. Oh, some other terms. What do we need to know? I think we need to know about the currency pairs, right? These ones. There are specific names for these two currencies. First currency is called base currency. Second currency is called quote currency. So in Eurodollar here, Euro is the base currency, USD is the quote currency. What does it mean? It means Euro is the base. You are buying or selling Euro. But USD is the quote currency. It means this is the price expressed in dollars for buying this Euro. So you're paying in dollars. And the price means you pay this amount of dollars for 1 euro. So the price is it's like a ratio between the price of euro and the price of dollar. So how much you pay in the second currency for the first currency. It's not important to know it by heart, right? Just know that these currencies are called differently. Base currency, quote currency, and be careful about them. So the order matters only because you buy one of them and the price is expressed in the other one. So these are important things to keep in mind. Any other questions? By the way, don't forget to like and subscribe our stream. If no questions, we go further to this beautiful chart on the right. This is called, how is it called? Is it only chart? Okay, it's a price chart. Also, they call it price history chart or just chart. And what does it show? It shows these numbers as they were happening over some time, right? As you can see, the numbers change very fast. I mean, quite a few times per second, for example. And it could be like per hour, it could be thousands of price changes. And could be millions for a day. And you cannot put all the numbers on your screen. But if you want to know the general behavior, what's happening on the market, what has been happening for a while, for example, you want to draw some figures on your screen to give you a general idea. So the simplest way, I think... Oh, thank you for 2 likes. The simplest thing is just you just draw the average price, for example, over some time. Actually, it's not average in this case, but we'll get to it later. So it's a simple line. Yeah. Sorry. But it's not very informative, right? So we can see how many, like 40 numbers on this chart, but it represents like 3 days of price changes, right? So it's not very informative. Maybe we could put more information on the chart to give better understanding what was happening for the last 3 days. And here there are other 2 modes we can see. One is called a bar chart. And what does it show? These individual lines, vertical lines, are called bars. Hence the bar chart, right? And they have 2 small lines on the left and on the right. Each vertical line represents some fixed period of time. In this case, it's 1 hour, right? We have 1 hour H1 bar chart. It means that every vertical line is 1 hour. And the small line on the left shows what the price was at the beginning of the hour. It's called open price. Give me a sec. I'll write it down. Oh, I will write it down later. So the one on the left shows the open price. So here the open price was for this hour. Actually, I think we can have... Can I show it? Okay, I don't know where it's turned on. So this specific hour, which one is it? Okay, let's take a look at this one. Okay, whatever. So this was the price at the beginning of this hour. This is the price at the end of this hour. And what do the extent of the vertical bar shows how the price traveled within that hour. So we can see within this hour, the price didn't change that much. The upper tip is a so-called high price. It's the maximum price that was achieved during this hour. And the bottom is a low price. So low price, high price. And you can see that the lowest and the highest price during the hour did not change that much. So it was a pretty calm hour. But here you can see during this hour, the price changed quite a lot and even went down and then returned by the end of the hour. Maybe we can see some other interesting bars. Yeah, sometimes you could see the price started and ended during the hour almost at the same level, but it traveled high and low, right? So this was a bit more jumpy hour, maybe, for that price. But in the end, the price didn't change much during that hour. Okay, so this is the bar chart. One property of the bar chart is that it's ugly. Nobody likes how it looks. And that's why people usually prefer the candlestick chart, also called candle chart. Also, it's probably called Japanese candles. I'm not sure. Just it's candles. Those are candles. Some rectangles with some things up above and below it. So just call them candles. Also, people call them bars, so it's fine. I have a question here. Which price? A very good question, right? So when we talk about price, anywhere where we talk about price, it's a question we should ask ourselves. What price? As we mentioned, there are many different prices. It could be bid price, ask price, mid price, last price, or anything else, right? And in this case, in MetaTrader 4 and MetaTrader 5, it's bid price. So, for example, we can see our rightmost candle. Let me see. And I can show on the chart, where do I show it? Probably here. Show bid price line. So this one is a bid price line. I'm showing also at ask price line. And I will switch to minute chart so that we can see closer. How do I do it? Is it like this? Zoom in. So here you should be able to see. Here, you see this price, the candle changes together with the bid price. So what's happening? I don't know what's happening. Why? Okay, should be fine now. So the bid, the ask, and this chart is drawn by the bid price. So when the bid changes, the candle also changes for the current minute in this case. Oh, another minute started, and the bid draws another candle. So a question, why is it bid price? The answer is because in MetaTrader 4 platform, they use the bid price, and people got used to it. So in MetaTrader 5, you can actually draw the charts by another price, but people don't usually change the settings because traders usually expect that the chart is drawn by the bid price, and they could get surprised. However, for example, if we go to another terminal, like something, okay, for example, here is the Godel terminal, right? And we see the chart of the AMD. I am pretty sure that this chart is drawn by the last price. So technically, last price is the better choice for drawing a chart. However, in MetaTrader, we usually don't have the last price. That's why we cannot reliably draw the chart by the last price. However, in exchanges, usually they have the last price, and they know it, and they use it. And that's why the chart is drawn by the last price. So it's the chart of at what price somebody bought and sold this asset. Okay, we had a big jump here. What's it? Euro dollar. Okay. What else? Any questions about the charts? Oh yeah, why are some of the candles white and black? It's a good question. Actually, it does not matter whether it's black or white. In candles, what matters is whether the candle is empty or it's filled, right? So we could change the background, for example, from, we say we don't like the black color, we want black and white. In this case, this is the empty candle, this is the filled candle. So the candle is the same color as the background, it's an empty candle. And the filled one is black in this case. And what do they show? Why it's filled or empty? As you can see in the bar chart, you can see the open price and the close price of this hour. Like what's the first price and what's the last price. But when you have rectangles, you cannot see that. That's why the color of rectangle shows whether the highest edge is at the open price or the close price. So basically, if the candle is empty, the price went up. If the candle is filled, the price went down. So this is the open price, this is the close price. This is the open price, close price. This is open price, this is close price, because it's empty, so it went up. So we can, I think we can open two charts. We can, and we can tile them like this. Let's make them the same. Okay, you can see here, it's the same chart. It's the same price, just this filled candle is white in this case because of the black background, and it shows that the price went from here to here. And this way the candles show what's the open and close price. So candle bar is the same as candle. It has open, high, low, and close price. So the candle shows 4 numbers for every period, right? So period. In this case, like 1 minute period is M1, 1 hour period is H1, etc. Like if we want a day candle, it's going to be D1. Any other questions for the charts? Oof, it's been 50 minutes. Okay, let's quickly see other things, a few other things for the chart. We can see some bars also here, right? Some lines. What do they show? They show us tick volumes in this case, right? So we can turn it off, we can turn it on. Tick volume is they show how many times a price has changed during this period. And it does not mean anything. Like you can ignore it safely. It does not mean anything, and unlikely you would be using it for something. So you can just turn it off, right? There is another setting, volumes, but here it does not show anything because volumes are not shown on this brokerage account. But for example, in the Godel terminal, we can see volumes here next to the chart. And the volumes show how much of the asset was traded during this period, right? So in this case, volume is shown in millions of dollars. I think it's millions of dollars. So how much of the asset changed hands during this 1 day candle, right? Or we can do them 1 minute, probably. It does its work, but I don't like the chart. Let's go for 1 day, back to 1 day. So during today, almost $10 million worth of AMD stocks changed hands. Somebody bought and somebody sold. In total, almost 10 million. But it will be more, right? It's only growing for today. And you can see that on some days, more assets were traded, but the price didn't change that much. And on some days the price changed a lot, right? So you could potentially infer some information based on how much people are trading during the day or an hour and how much price has changed. So we've seen the volume. It's like the total volume, total amount of something that was traded during that hour or that period. And what else? Questions welcome. Oh yeah, important thing. On the charts, you can also draw some lines, right? You can use, I cannot see it. Maybe if we change the color to black. Okay, now I can see it. So if you see some things drawn on charts, oh, I cannot seem to do it. Whatever. So if you see some drawings on the charts, you can completely ignore them. They are mostly bullshit, right? So whatever lines people draw on the chart, they don't mean that much. You can just ignore it. So somebody is probably bullshitting you when this happens. So somebody could say that it's technical analysis, right? Technical analysis is a discipline, how do you call it? So it's a method of predicting future price of something based on the historical prices, right? So based on the charts. So I don't say that technical analysis is bullshit, but I say that if somebody shows you technical analysis, then that is probably bullshit. So it's similar to astrology, I think. So if somebody says that they're an astrologist, they are probably bullshitting you, or they might not be bullshitting you, but somebody else, right? At the same time, I don't say that astrology does not work. It does work for somebody, right? Just those people don't call themselves astrologers. What else? Drawing a chart. Okay, let's do some trades then. I make a new chart. It's a GBP USD. It's pound sterling versus US dollar. And since this is a trading terminal, I can make some trades. So what is an order? It says here an order. So actually the word means what it means, right? You order somebody to do something, right? In this case, we say we want to buy pound sterling for $4. And when we press buy, the order is sent to a trading system. And in this case, it gets filled. So let me see. Let's write things. Order. it gets filled. And we can see multiple things here. We can take a look. For example, this thing is the order that we sent when we entered the numbers. It's the details of what we ordered to happen. And this thing is a it does not open this thing, but this record, it shows that the order got filled, and the result of the fill is called a deal. Deal, an important thing. So order is something that you make. It's an instruction that you send to a trading system. And a deal is the result of the order getting filled. So this is the actual trade that happens. So when deal happens, you receive what you wanted. So you wanted the pound sterling, you get it. So if the order is filled, you get successful execution in this case. And this thing is called a position. Position is like the names. Let's get back to the names, right? Order is something that you order something to do something, right? Deal is somebody agreed to execute your order, right? It's like two people, they shake hands like this, and you got a deal. So your order got filled. So you have what you wanted. And the position, the name of it, is where you are. Position, your position somewhere shows where you are. In financial terms, where you are means how much of what you have. So in this case, we have one lot, one thing of pound dollar, right? So it means after I bought it, I have it. If I buy another one, okay, whatever. Now I have two things that I bought, right? This one, and this one. So I would say in total I have two. So my total position is 2 GBP USD because I bought two. And these are very important things to understand, right? What is order, what is a deal, and what is position. So order is something that you, it's an instruction that you send. Deal is the result of your instruction getting executed. And position is how much you have as a result, right? I see some questions. Sorry. Why they show it to me? Irina, I'm afraid I don't understand your questions. Why they show it to me. What do you mean in this case? And your last question, order is trade request. You could say that order is a trade request, right? But it's a less defined term what a trade request is, right? So in MetaTrader, for example, what we in our work deal with, it goes like this, technically. So there is a request to make an order. The request creates an order. An order, if it gets filled creates a deal, and the result of a deal is a position like this. I think this part is different for different platforms, right? But in MetaTrader 4 and 5, it is like this. So request becomes an order, and the order makes a deal, and deal results in a position changing, right? Oh yeah, I see the explanation. Graphics that you can draw, tech analysis. This argument this argument can be applied, right? So if technical analysis works, why would you show it to somebody else instead of making money by using technical analysis, right? But this is a slippery argument, right? So you could say that, Timur, if you're so smart, while you're explaining some things, you could be making money instead, right? So I understand what you mean. You can use that argument, but you can use it everywhere. So it's not effective to use it. Just I recommend to ignore any technical analysis. I mean, technical analysis works, right? But not the one where you draw lines on the charts. Absolutely, so many trading systems, especially automated trading systems, they use technical analysis, right? Because they analyze the price streams, the history for prices, right? So it's a thing that works, and especially computers are really good at technical analysis because they can process a lot of trading history, prices in a moment, right? However, the one where you see the lines on the charts and somebody explains that something will go up or down, it's unlikely that it works. Okay. So we've sent an order. We executed some deals. We got some deals, and as a result, we got positions. Some terminology about these. So for orders, there is a buy and sell order, right? It means, like, if you want to buy, you send a buy order. If you want to sell, you send a sell order. For deals, you can say there is a buy and sell deal, right? Also, there is terminology bought and sold deal, right? Which I think is more fitting, right? So order that you want to buy, but when you bought, you got a bought deal. Also, it's contracted very funny, bought, sold, like this. So don't be confused if you see these things, for example. Positions. Also, you could say you have buy or sell positions. Also, you could hear terminology long or short positions. So long position is when your total position is positive, right? It means that in this case, our position is long two lots. In this case, maybe lots will cover in the other lesson. So 2 pieces of bought GBP USD, right? So our position is +2 in this case. We could, for example, do a sell trade. Where do I trade? Here. We do sell 3, and we have 3 positions, and the total is sold 1, right? So we bought 1, bought another one, and sold 3. So we're short 1 piece of GBP USD. So I hope this is clear. So long position is when you have bought something and you have it. Short position is the opposite of that. So if you sold something that you don't have, so you're like negative amount of some trading instrument. Also, there is a term flat position. Flat is when you have nothing, right? So for example, when I close a position, for example, I close all these three positions. Close it, close it, close it. I went flat. So I don't have any position for this instrument or any instrument for that matter at this moment. And by the way, what is close? It's not probably here, probably not here, but close a position. So when I buy something, I bought one, right? So I can sell what I bought. So if I create a new position, I'll create a sell position. But I can also undo this position. I mean, I make a sell of what I bought, specifically this. So I can do a close here, or I can press the crosshair here. So closing is doing the reverse of what opened the position. Something like this. Any questions? Can you recommend some resources on the truly useful part of technical analysis? No. I mean, it's probably a part of some algorithmic trading, so it's probably way down the road of algorithmic trading, where you analyze the data and start making trading scripts and learning that thing. And over time, you will be doing technical analysis, not knowing that's a technical analysis. Okay, another question. How can I open a sell position if I don't have it yet? But that's a reasonable question, right? But what does it mean to have something, right? For example, when I buy GBP USD, do I have it? Like, is it mine? Can I take it? What does it mean to have something? It's just an abstraction, right? So you can say that I have one piece of GBP USD. What does it mean? Like, whatever, right? I just have a positive amount of this, right? But as I have a positive amount, I can have a negative amount. So in technical terms, it's like this. As I mentioned, buying in the beginning, I said it's very important. Please make sure to understand that it's very important and you will be getting to it all the time. That buying and selling is the same thing. There is no difference between buying and selling. There could be some differences in specific contexts, right? But in general, if you can buy something, you can sell something. Can you buy something that you don't own? Yeah. Can you buy something that you already own? Yeah, you can. Can you sell something that you do not own? Yeah, it's fine. Who's the judge, right? Of course, there could be some restrictions, right? But they are not inherent to financial system, right? So for example, I could make a rule, don't buy this instrument, right? And maybe I make a program that will not let you buy the instrument. But that's not the result of financial trading, right? It's just I made a restriction, you cannot buy this instrument. Or you can make a restriction, you cannot sell something that you don't own. Okay, but it doesn't matter. Like technically, you could sell it, whatever. For example, if you're trading stocks, right? Stocks are shares of companies, right? So they're some pieces of companies that you can buy and sell. And technically, there is a limited amount of the shares of each company. So what happens when you sell a share that you don't own, that you go short on a share? They say that your broker lends you the share so that you can sell it. So technically you can sell it without owning, and legally it's arranged as if somebody gave it to you, like your broker gave it to you, lent it to you for a while, and you sold it, right? So there is some legal speak. The broker gave you something, right? Which you didn't see, you didn't receive it, but it somehow happens like this, and you sold it. And on the screen, the result is exactly the same. Of course, the broker will charge you money for that, right? He will say, I lent you some asset which you sold. That's why you're going to pay me like $10 a day, for example. Yeah, whatever. That's the rules that they make. So that's answering the question, how can you sell something that you don't own? You can technically do that. And technically, you also don't own anything. Next question. Do you have any other questions? I think we've taken much more time than I expected. So, guys, if you have any questions, let's answer them. And if not, let's wrap up the stream. A question. Is opening two opposite direction deals a good strategy? The price moves eventually, and I'll decide which one to close and which one to keep. Well, first thing, you don't open a deal, right? You open a position. So it's the first thing. Opening and closing is about positions. So you make a deal, I think. So you say, if you open two opposite positions, is the good strategy, right? The price moves eventually, and I'll decide which one to close and which one to keep. Well, it depends on what you want to do. So this is used sometimes, and but it will not make you money though. So for example, I buy one piece of GBP USD and I sell one piece of GBP USD. I have two positions, and the problem is, if the price goes up, the buy position will give me profit, but the sell position of the same size will give me a loss of the same amount. Except for, as I mentioned, by opening buy and sell, by making a buy and sell trade, we lost already money on the spread. Maybe later we can see the calculations on the next lessons, right? But the general idea is just buying and selling at the same time, you already lose the money. by paying the spread, the difference between buying and selling. And after that moment, the price change, if the price goes up or down, they will always, one of the positions will earn money, the other of the positions will lose the same amount. So the total profit will not change much. For example, here we see the total profit is around the same amount, and wherever the price goes, it will be approximately the same amount. So you can close one of the positions, but that will not change the profit. But why would you want to do that, for example, right? For many things, right? But for example, you somehow you predicted that, for example, let me show you. So you say, oh, the gold will cost like 2,500 in 1 month, right? So you're convinced that will happen, and you do the buy of, oh wait, that's not gold. Let's do the gold. You buy 1 piece of gold. And if the price goes to 2,500 as you predicted, you will make money on that, right? So actually, let's do it another way. We'll do the trade and we'll also make a comment here. On July 21st, you say your prediction is it becomes 2,500. And we can see the comment here. So this is the result of your prediction. You say that you will earn money by the end of July, right? And you leave for a week, for example. But next week, you're convinced that, yeah, your previous estimation is still valid, but this week it will go down by $100, for example, and you do a sell to capitalize on your prediction, and you say by Sunday it's gonna go to 2,200. So you made a trade, and by the end of the week you see how much you made on this prediction, and at the end of the month you see how much you made on this prediction. So by having so-called hedged positions, okay, let's write this down. So hedged positions are the ones that overlap in direction, right? So one of them is long, the other one is short. So they hedge each other, it's called. So you could use the hedge positions to, for example, track the progress on each of your predictions, right? And if you didn't have hedged positions, right, you would see a flat position here. So within that week where you predicted the price would go down, you would not be able to easily understand how much you made on that prediction. But if you separate them, you can track that. So this is one way to use hedged positions. It's just for mental clarity, I think. But overall, technically, a hedged position is almost the same as flat position. Fully hedged position is almost the same as flat position, apart from the fact that you'll probably pay more money for hedged positions. Okay, another question. It depends on broker settings. Well, MD5 allows to restrict you from choosing which position you can close first. Irina. Well, yeah, anything could restrict you, right? So in MT5 there are some specific rules that you can enforce right? But yeah, yeah. So what we're covering here is like what happens if you have no restrictions, but of course you can have more restrictions always, and it will affect what you can do and what you cannot do. Okay, not a question, just feedback for me. Flashing game videos. Okay, okay, thank you. What do you want me to have in this place? Like this? Okay. Any other questions? Okay, guys. Okay, I hope you like it. Okay, we've covered a few topics today. What are instruments, the different prices, the currencies, how the chart works, how orders, deals, and positions differ, what is opening and closing position, what is hedge positions, and thank you for coming. Bye.